Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson, Martinson Ag, and we did see higher closes in both grain and livestock futures trade on Friday. And Randy, it was kind of a wild ride during the session on Friday, but grains all to the plus side. How much of that do you attribute to weather again and putting premium in?
I think quite a bit of it, because we were actually struggling to start the session, but once the noon weather forecast came out, we started to see some buying hit the market, especially into the corn market. Soybeans had strength throughout the whole day. I think some of that spilled over to help, but I think the weather market helped turn the corn, and that helped to put the wheat market back into at least into positive territory as well.
Yeah, and maybe some positive influence from outside markets. The Dow and crude oil both had pretty good runs on Friday.
They did. You were looking at, as far as the Dow, of course, with the debt ceiling coming out, that getting compromise getting done, getting through the Senate, through the House, and then likely signed by the president. That all helped. Talk of from the Fed that they're not looking at increasing interest rates on this next meeting. I think all that came in to help really push the Dow, which brought a little bit more, a little bit better feeling into the marketplace and a little bit more encouraging to buy.
No doubt. So let's talk about corn in particular, because we did see a very strong close in the July above $6. We saw the forward spreads working. Is that an indication of just how tight this market is in old crop and how strong cash is?
I think it is. We've dropped down below that $6 level. When we haven't seen a lot of demand, we've actually been seeing more on the cancellations or slowed exports. But I think it's because our supplies are so tight, and I think that really helped to bring that July contract back up again, closing above $6. That opens us up. Now we could see a little bit further run, maybe that 625 area. But again, it's going to take the continuation of some weather concerns to keep that market rolling.
Yeah. Although we were up, I think 5 or 6 cents in both July and December for the week. And so corn, hopefully we can start building on that. And certainly the drought monitor showed that we're seeing expansion of drought. And if we don't get any rain here in the next couple of weeks, we're going to start shaving yield, aren't we?
We are, and I think in some areas we already are. I think, you look at the Western Corn Belt, which had the biggest part of the drought last year, is still seeing reeling from some of the dry conditions, especially in Nebraska. And we're starting to see that expand, into Missouri, into Illinois. And, with the rain being pulled out of the forecast at that noon run, I think that really helped to encourage some traders to come in and cover some of their short positions.
Soybeans saw the same setup, though. July gaining over the deferred contract. So again, was that all about what we're seeing in terms of the cash price or what?
Yeah, I think we still have some tight supplies as far as soybeans are concerned, and I think it's more on the domestic side. Of course, we're not really competitive on the export market, and with Brazil, basically exporting almost a record amount the previous month, it kind of takes us out of that market. But I think just even domestically, the end users are having a tough time finding beans.
And July closed back above 1350. That was pretty significant technically, wasn't it?
It was. I mean, we've been flirting down below that level, so getting up above it, we're starting to get above some of those moving averages. So yeah, it's certainly going to help encourage to see a little bit more buying come back into the market.
It is going to take what to get us back above $12 though in November? We've struggled with that. Is that a major weather problem, or is there something else that could get us above that level?
Well, it's going to take a combination of things. I think one of them will be a weather, that we continue to see dry conditions. But I also think it's going to take, finding out where our planted acres are going to fall. Right now, I think the expectation is that because of the slower planting we've had up in the northern plains, we're switching a lot more of our crop over to soybeans. So I think the market or the trade is anticipating higher soybean acres come in that end of June report. So I think that's kind of keeping a little bit of a cloud over that soybean market. I think it's going to take until July before we see that taken care of, though.
Gotcha. As far as the weekly closes, we were up over 13 cents in old crop July soybeans, which almost was kind of a surprise to me with how bad we started off the week, hitting those new lows for the move.
It was ugly to start this week, and yeah, it was nice to see that. And that kind of leads us to believe that, one, we probably got too cheap. The market, we had no selling, farmer selling virtually dried up. So I think some of that is also the fact that we got too cheap and we needed to get some premium back into this market.
Yeah, too cheap, but then you get imports coming in on soybeans yet from Brazil even. So
That's still a little bit of a head scratcher. You look
Yeah.
at the fact that we're importing wheat out of the European Union and another big sale, or big purchase coming from Brazil. You got to wonder sometimes.
Wheat market closed higher on Friday as well. Did wheat just follow corn and soybeans in that rally there, or was that outside market influence, or was it weather?
I think it was all three. When you look at it, you had the wheat market was kind of struggling to start the day. I think we just saw a lot of spread unwinding and spread trading between the classes. But by the time the weather forecast came out, Minneapolis started to come a little bit more alive and actually jumped ahead of the winter wheat contracts. I think some of that is tied to weather, the fact that Canada's seeing some dry conditions, not having a tough time getting the crop in and actually get it started. Seeing the same as far as North Dakota is concerned. We're looking at the western starting to get to be a little dry, a little bit more droughty. And I think the winter wheats are finally starting to see just how bad that crop is coming in with the harvest.
And we still are trading headlines. Black Sea Grain Initiative might be in place, but there's really no grain moving, is there? Or very little?
Very little. From what we're hearing is that Russia's not inspecting the vessels to give them authority to come into the Black Sea. So that's virtually has shut down the export program there. And so even though Russia agreed to extend it, they still got their way by kind of slowing it down dramatically.
We have a WASD next week. What do we anticipate? That report usually isn't, highly volatile just because we kind of wait for the acreage report at the end of the month, right?
Right. And, we've got a quarterly grain stocks report that'll come out at the end of June and the planted acres report. So not likely the June report will steal any thunder from that report, but I would expect that we could see a little tightening of for wheat, expanding of the ending stocks, because it's likely USDA will cut exports because that marketing year is over now. And I wouldn't be surprised to maybe see some tweaking in winter wheat production, but that would be about it.
The bright spot of the week is the cattle market. All-time highs in the futures. It looks like we're going to have a record week for cash trade. Are we anywhere close to a top, do you think?
Boy, that's it seems like we're trying to catch a falling knife there. The market continues to have some pretty good strength. And this was a really good week when we finally started to see June try to catch up to where the cash has been trading at. I still think we got some room to move. If the economy continues to be good, as we mentioned, with the debt ceiling taken care of, with the idea that we're not going to be looking at increasing interest rates again, I think that's going to help build. And I think we had a pretty good demand over the Memorial Day weekend, which tells us that the consumer has kind of embraced the higher prices. So I think we still have some room to move up as far as the cattle are concerned.
And we saw cash trade all the way into Friday moving higher. I heard of some trade that was going to go right away to the packer and they were going to pick it up. So obviously the packers were caught pretty short bought here, it looks like.
And I think, this hot weather is adding to that. We're seeing a little
Oh,
bit slower performance in the feedlots. We're seeing a little bit slower movement because of the 90-degree heat. It's tough to move the cattle with that. So I think you're kind of seeing a combination of things that have kind of made it so that the packers are needing to try to entice producers to move the product.
so for our weekly closes, June was up over $9 in live cattle. We were up almost $8 in the August, and feeders were also into record highs this week, and we were up there about $8 as well. And feeders, we actually took out the all-time highs in some of those contracts too, didn't we?
We did, of course, that's been that, 240 area that we set back in October of 2014. And we took those out in all contracts except the front month August. And part of that is, it just shows that the feedlots are very aggressive to buy, trying to keep their lots current or to keep them full. But we're also seeing a really slowdown as far as product availability. There's not a lot of calves that are ready to be moved into the feedlot. And I think that scarcity of that supply is helping to bid that market up.
Higher week in the hogs, if you can believe it, over $10.50 on the June contract. It looks like maybe it's more than just short covering.
It does at this point. I mean, it looks like it's real. After you see, you like to see 2 days higher, which kind of helps signal that you're looking at a trend change. Limit up on, I believe it was Wednesday. Then we also saw some good strength, or on Tuesday, saw some strength follow up on Wednesday, little losses on Thursday. But we came back Friday with gains, and that tells me that it's a little bit more real. I think, tighter supplies and the idea that we just like we've seen in the other markets, we got too cheap.
Thanks for joining us, Randy Martinson with Martinson Ag, and that's Markets Now.